Welcome back to the channel and welcome back to Sunday Stock Watch. Series I post every Sunday. We'll let you guys know what stocks I'm personally keeping it on going into the trading week. So as always, we'll go over each topic that we're going to be discussing, then we'll dive into each one individually. In front of us, Trading View, the usual, where we will be looking at all the charts today. The reason we're opened up on Apple is because that's how we're kicking it off with news. All right, so I'm sure you guys have heard this news by now. I've already covered it a few times on the channel. Apple and Tesla stock split. I mean, this news has already made huge waves in regard to the price action of each of these stocks. If you were holding either of these stocks going into the weekend, going into Friday, then you're going to open up this week. You're going to open your whatever app you use on Monday and see more shares there. Okay, so huge news. Obviously, like the market, a lot of the market does dictate that as just straight up value creation. But we're going to touch on this article, which is just, again, I've talked about this. It kind of touches on the fractional shares that like brokerages like Robinhood and Charles Schwab already offer. So personally, I don't think the stock split was a big deal. Obviously, it did impact the stock. I'll sum this up by saying something that I've said multiple times on the subject. I think this is a buy the news, sell the event, or buy the hype, sell the news type event. That means more literally, I should say. Buy the news, sell the actual event. Okay, so the news has driven both of these stocks, I mean, absolutely ballistic. And I personally think that they're going to see a little pullback going into next week. Okay, and I'll explain that. I'll explain why and where I think they're going. Again, when we go back into the charts here, you can have a general idea just looking at this arrow. But those are the primary two that we're gonna kick it off with, of course. Okay, so after Tesla, we will keep it in the EV realm. Obviously, EV sectors are hot. IPOs are on fire as well. So there's a double whammy here. XPENG IPO shows strong investor appetite for electric vehicle makers. So again, Tesla been on fire. Tesla is the kingpin of the EV sector. And as you guys know, when the leader of a specific sector does well, it's very likely that smaller players or competitors in the sector will do well as well, even though they are kind of competitors, just kind of guilty by association. Everyone wants a piece of a booming market, okay? So we'll cover XPENG, they just IPO'd. We will also cover another Chinese EV company to really keep the transitions fluent. So another Chinese EV company. So there's now XPENG, which just IPO'd, Li Automotive, which IPO'd at the end of July, and then of course Nio. Nio's been on fire lately. I've been following Nio for a long time. We will take a look at all three charts very quickly, but I want to read this quick kind of it's a Goldman Sachs analyst, and this is what really caused Li to explode. Since then, they have pulled back, and I'll explain why I think it's probably a good buying opportunity coming up off this pullback. But we'll cover this. Also, I just want to talk about this vehicle with you guys. So this is Li's SUV. This thing's sick. It almost reminds me of a Rolls-Royce Cullinan, if you guys are familiar with that. But this is a sick SUV. I haven't seen other EVs. Another EV concept like this. So that's dope. From there, we will really switch, really turn the tides to gold. Okay, so a very different sector, really highlighting the inflation hedges that I've been talking about so much over the past few months, honestly. In a world where governments are printing trillions of dollars in fiat currencies, inflation hedges like gold, like silver, hard money, God's money assets, and Bitcoin, the people's money, as you guys know, I'm super bullish on if you've tuned in. We will touch on gold, silver, some gold and silver miners, which I'm even more bullish on than gold and silver themselves. And of course, Bitcoin miners, because that's probably the single sector that I'm personally most bullish on. I talk about them a lot though. So we'll save that for the end, and we'll focus on some stuff that I feel like would be a little newer to you guys who have been around. But again, if you guys haven't heard me rant about the Bitcoin miners, I do recommend you stick around to the end. Okay, so before we get into it, as always, I will ask you guys to please give the video a like. If you do go on to gain value from it, or if you are invested in any of the stocks we're talking about today, subscribe to the channel if you're new around here. And of course, check out my complete portfolio and daily newsletter if you want to know my exact trades and some of the assets that we're talking about today. The 7-day free trial will expire tomorrow night, or depending on when you watch this, Monday night. So at the end of August, that's leaving. So I will only be doing the free trials at the end of each month. I've decided that. So check it out. Charge free, I guess, price free if you want. If you don't like it, feel free to leave. If not, stick around, and I appreciate you. Either way, I appreciate you if you check it out. If not, no worries at all. So that said, let's get into Apple. Okay, so as I'm sure you can see here, I do, again, like I said, I expect a pullback here. I do think that it is a buy the hype, sell the news event. The reason I keep mixing that up is because I see some people like, well, if it's buy the news, then why would it still be going up? But it's more buy the news, sell the actual event. Okay, so that's what I think it is. I think the news of the stock split, everyone and their mom at this point knows that the stock split is occurring or has occurred. And although the price is cheaper, again, things like fractional shares on Robinhood actually make it so it's not a huge deal. Okay, and I just realized that my mouse is dying, so I'm gonna have to use my cursor over here. Sorry about that. But So you know, we'll touch on this. Actually, no. I'll let you guys know what I'm thinking in terms of price action. Then we'll touch on this. Then we'll move on to Tesla. Okay. So as you can see here again, I do think just because Apple's run up so freaking much, this applies to Tesla as well. You guys, I just do want to say right before we get into this and I talk about the pullback. If I'm going to upset any of you, I don't mean to upset you. I'm just being I'm trying to be as rational as I possibly can here. It's very rare to see just gains like this that are uncontested. Okay, so as you can see here, like we saw this crazy move up. Obviously, since the liquidity crisis, since the market crashed back in March, we've seen this crazy, insane comeback, especially within the tech sector. And I do consider Tesla a tech company, so keep that in mind as well. But Apple is, at the beginning of this year, Apple was at $320, and that was pretty insane. Okay, Apple was still a huge company, still had a pretty gnarly PE ratio, but now Apple is just like, it's insane. Okay, and that's a big reason the general market, so the S&P 500 is market cap weighted, and we did cover that on Friday as well. If you guys want to check out that kind of conversation about how Apple and Tesla weight the equity indices so heavily, and that's really what kind of is carrying these markets. So Apple, obviously $2 trillion plus company. It did breach $2 trillion just a couple weeks back. Apple, poster child of the entire stock market right now. But once again, everyone and their mom, it's always a red flag in my eyes when I have people, friends, family who have no idea what, like, they've never traded a stock in their lives, and they're asking me if they should buy Apple and Tesla stock before the stock split. That's something that I've learned over the multiple bubbles that I've played in the past. That's usually a good time to sell. That's usually a good time to where maybe you should consider taking some profits in that stock. Okay, so just from a pure technical perspective, you can see on the 4 hours, I will be looking at all the charts we look at today on the 4 hours. That's what I use to dictate. That's the primary that's the primary time frame, the primary candle I use, or I prefer to use to dictate medium to long term price action and trends. So RSI is going down. The stochastic RSI is on its way down. I think that will probably level out at the bottom. Traditional RSI is still pretty high, so this is around like 70 still, that area. I'm sorry, my fat head's in the way. I'm not going to move myself though. Just trust me when I say that though. It's around 60, 65, I think, and volume is going down. So volume is obviously trending down. I think it's very reasonable to expect Apple, and I'm saying this for you guys if you're holding it, that you might want to consider taking profits. Again, none of this is financial advice. Apple and Tesla, which I do think will retrace personally, could continue to just keep absolutely pumping. Okay, so keep that in mind. But I do think that Apple will see a retracement. If it does, I believe it will use this area that it once used as resistance, as a line of support. It did successfully use this line as a line of support back in the beginning of August, so I think it's very reasonable to expect it to once again bounce off this line and probably continue an uptrend, just because the Fed keeps printing money, which we will get into when we get into gold and stuff. But again, I do think nothing goes up forever, guys. Nothing goes straight up. It can obviously trend up, and I do believe Apple and Tesla will trend up over the very long term, but it's going to be volatile, especially when you're dealing with such volatile markets overall. Okay, so that said, I am expecting a pullback in Apple. Let's move on to this. So I'll read this with you guys, and I'll just give you my 2 cents afterwards. Shares of Apple and Tesla Inc. will be less costly on Monday as pre-announced stock splits take effect, in theory making them more accessible to retail investors, but as more brokers offer fractional shares, some in the market question the need. Both Apple and Tesla said their actions of 4-to-1 and 5-to-1 split respectively would let more investors access their shares. But in the past year, online brokerages like Robinhood, Charles Schwab, and Fidelity, along with several smaller shops, have begun offering slices of individual shares. Fractional share ownership, all else equal, really does not render the price of a stock irrelevant. Really does render the price of a stock irrelevant, said Julien Emmanuel, chief equity and derivative strategist at BTIG. That, combined with commission-free trading in most brokerages, has made it easier for anyone with a mobile device to own a piece of a company. Okay, so this is a big argument that I've had from the get-go, from whenever the first time we covered this was a few weeks back, is that so many brokerages like Robinhood, because that's the brokerage I primarily use there, they've obviously pioneered commission-free trading. They're pioneering a lot of stuff, and it's only a matter of time before every brokerage out there available on the market allows fractional shares, just because it makes perfect sense. Why wouldn't you offer fractional shares? Okay, so they're already doing this. Obviously, again, a lot of people believe that I use the pizza analogy. A lot of people think that, and like the TikTok traders have been talking about them, is that this is going to create generational wealth. Like people think that, okay, say one share currently is a full pizza. People think that once the stock splits, you're going to have 5 full pizzas, okay? No, you just have 5 slices of the initial pizza. That's what a stock split is. You're not multiplying the pizza. You're not just generating pizza out of thin air. So you guys get that. But again, I think to sum it up, I do think this is going to be a buy the hype, sell the news event, just because they've ran up so much. And on that note, let's look at Tesla, and then we'll move into some of the other players. All right, getting a little long here, but move on to the EV sector. You can see here Nio, Li Automotive, Xpeng. Again, we'll look at all these real quick. So Tesla, again, dude, Tesla is just so insane. Tesla is just such a force to be reckoned with in this market. But just look at this. We saw something similar to here. I wouldn't be surprised if we see something extremely similar to right here play out. And once again, you can see the exact over the course of these past few months, Tesla successfully used these trend lines. So you can see once it broke out of here, once it successfully broke out of what was this line of resistance and support that it was using around this area, it broke out, and that initiated the second move up. And then you see a correction down to that trend line that it was using prior to that. So I believe it's fair that Tesla will use this line that was once resistance and then went on to use as both resistance and support as a line of support again. Okay, so this principle applies to any stock you look at, any chart you'll ever look at. And again, you guys, the reason I use trend lines primarily is because that in this current market environment, I found that just very basic trend lines are very telling of a stock's movement. Okay, so I do expect Tesla personally, it did reach a high of $2,300. That's absolutely insane. It's currently floating around 2,200. I think it will pull back and retest this again, a line that was once used as resistance and support. As a line of support, that would bring it down to about the $1,850 to $1,900 area, give or take. Okay, so that's what I would guess. Again, you guys, if you're holding some Tesla, if you made profits on Tesla, I would really recommend just considering maybe taking some profits, even if you're bullish long on the stock, maybe take some profits. And if it does happen to dip, it does happen to retrace or pull back or correct, you can pick up more for cheap. Okay, so that's how I manage my portfolio personally. Okay, so that's Tesla. Again, I do think Tesla and Apple will see a retracement. Again, I'm sorry if I've offended any of you Tesla moon boys, but things don't go straight up. Over time, 10 years from now, I think Tesla's going to be way above. So if you have the strongest hands ever, then hold and just chill. That said, we'll move on to Nio, Li, and XPEV. Okay, mouse is dying again. I thought it was working. Man, I should have charged that guy up. Sorry about that. So we're seeing here that Nio is following a technical so nicely. So it's always nice to me from a trading perspective, that is. And I don't day trade personally. Many of you guys know that I'm a swing trader, so I go long, medium to long term, most of my positions. But as you can see here, Nio is very beautifully following this line that was once a very solid line of resistance. Once it broke out of that line, you saw that crazy move up that it just recently had a few days ago. And now it's corrected. I wouldn't be surprised if Nio just bounces off this line that, again, was once used as resistance, as a line of support, and continues an uptrend. Nio is currently sitting at a market cap of $16 billion. So it's getting up there. I remember when Nio was like a $2 billion company not that long ago. But again, you guys, Tesla's been killing it. That encourages investors who want exposure to the sector, but maybe Tesla seems a little too intimidating. They want some more asymmetric bets in the sector. They'll go to stocks like Nio, like Li, like Nikola. That's why Nikola popped off again. You guys have to remember, Tesla is at 1,000 PE ratio. So historically speaking, it's extremely overvalued. And again, you can make the argument it's not overvalued if the market's dictating its value right now. But I mean, I've played so many bubbles in the past. I know what a bubble looks like. Tesla is a bubble, and I do think it will pop. 10 years from now, I think Tesla's going to be higher than it is now. But things don't go straight up forever. That's the market. That's life. The markets, everything works in cycles. That's just the game. Okay. So Nio, again, from a trader's perspective, I wouldn't be surprised to see it continue up. But the initial point I was getting at the beginning of that rant, sorry for that tangent, was that Tesla's price action. If Tesla significantly pulls back, then that'll mean one of two things. Either capital will flow out of Tesla, and people who are obviously fanboys or fangirls, whatever, of EVs, of the electric vehicle market, will want exposure in other companies. They might see opportunity in other companies within the sector. So either capital will flow out of Tesla if it pulls back significantly and flow into other companies like this, or it will maintain a correlation. Remember, you guys, guilty by association goes both ways. So either if Tesla falls, the entire sector will fall, or Tesla can fall and I mean capital can flow out and go into these other stocks. My guess is that if Tesla falls significantly, these other stocks will fall significantly as well because they've seen such a rally too. That's just my take. Keep in mind it could go either way. Sorry, I didn't give you any straight up information, you guys. I don't know. I'm just using the data and knowledge I have to the best of my ability, so understand that. But Nio, again, from a technical perspective, I wouldn't be surprised if it uses once again this line of resistance as a line of support and continues to trend up. Let's move on to Lee. And then, actually, you know what? Sorry about that. Let's take a look at this. We'll move on to Xpeng, and then we'll talk about Lee. So, Xpeng, move! Xpeng IPO shows strong investor appetite for electric vehicle makers. All right. Electric vehicle EV stocks have gotten a huge amount of attention lately, especially given the ascent of industry giant Tesla. Okay, so exactly what we've been talking about. Today, the initial public offering of another EV specialist showed that competition in the arena continues to ramp up. For some, that's a sign of worry. For others, though, it indicates a huge demand that investors have for shares of companies within the industry. Okay, so again, sorry for ranting about that. I fully should have known that I was about to read this. Another Tesla rival in China. U.S. investors have gotten familiar with Nio, a Chinese manufacturer of electric SUVs. Xpeng also makes electric vehicles with the goal of serving a consumer market that's hungry for EVs. Again, you guys, reiterate this for the 20th time. People like electric vehicles. Electric vehicles are having an absolute moment right now. And that's why stocks like Xpeng is going to look wild. We're on the 4-hour charts right now. Sorry guys, I'm not even going to give a technical analysis on this. We'll go quickly to like the 5-minute chart here to give you guys an idea of what's going on. So you see here, it just from a high and low perspective, XPEV just IPO'd. Okay, so that's why it looks so wild. It's only a few hours old. But XPEV hit a high of $25, a low of $20. So you're already seeing some volatility. But again, you guys, it's a super exciting industry. So China is a huge market. So that's another thing to keep in mind. That's why Chinese stocks like Nio are really having a moment. People are realizing although Tesla does operate in China, again, China is 1 billion plus people. They're a huge percentage of the entire global population. So China is a huge industry. Especially with kind of the Cold War that we're entering with China, we might see some logistical problems in the future, maybe with Tesla, I'm not sure. But Chinese native companies do definitely have a future, especially in the EV sector right now. It's such a young sector still. Even though it's popping off, I still think the EV sector overall has a lot of growth potential ahead of it, okay? So XPEV, I can't give any solid technical analysis here. Maybe you can see a trend line on like the 5 minutes, which I don't even care about. If on a very short-term time horizon, if XPEV does break above $23, I think we'll see another run-up. Okay, so that said, let's move on to Lee. This Lee article real quick. Just admire this sick SUV right here. I guess it's an SUV. It's kind of a truck, like Lambo truck. Not truck. So I'm from Hawaii, and sorry about this tangent, but I have to explain why I just called it a truck because that might sound ridiculous. So in like, I should say like the hip hop world, but I feel like not Hawaii. Sometimes people call SUVs trucks. And I've always wondered, like, they have the Lambo truck, the Rolls Royce truck, which is a Cullinan, which looks just like this. But in Hawaii, a truck has to be a 4x4, 6-inch lift, okay? So sorry about that. Sorry about that mix-up. But this is a sick car nonetheless. I'll just read this for you guys, and then we'll take a look at the chart. Last weekend, Goldman Sachs analyst Fei Fang declared Li Auto a conviction buy, initiating coverage with a buy rating and assigning a price target of $20.60. Fang told auto investors that Li is differentiating itself from Chinese rivals with compelling consumer experiences. It's a Li 1 SUV introduced in November 2019 is the first step in a larger innovation plan that could drive its shares significantly higher over time. Okay, so that's a very general statement. You guys remember when every time we cover analyst coverages, you always have to remember that analysts are people too. It is their job to analyze companies, really break down financials and whatnot, future potential, but they could be biased. Everyone's biased. They for 100% are biased. Everyone has their biases. I have my biases. You probably have yours, and just keep that in mind. But again, this is a cool company. This is a very cool car. It's unique. I haven't seen other concept cars like this in the EV sector. That makes me like it. And I will be honest, for full transparency, I do hold a position in Li Automotive currently. All right, so let's take a look at the chart. Again, Li just IPO'd at the end of July, so it's still a fairly new chart. We can go to the 4-hour candles on this one. It still looks a little wild, but I really like this. So I like the fact that Li is seeing a pullback right now. And in terms of where it's going, again, there's still such little data available on this chart that it's hard to give a long-term perspective. And you guys know that I prefer long-term perspectives. I don't day trade once again, but just from a very simple, just looking at this right now, you can see this trend line. Like, this is a pretty conservative trend line. I would call this a pretty conservative trend line going up right there. You go at the close of that candle, and I think that this could be used as an upward trend line. Okay, again, it's very early, and this will depend on the performance of the rest of the EV sector in my mind, especially because it's so new. But I like the fact that Lee did reach a high of $25. It's currently sitting at $17, so that's a solid like 25-30% retracement. I think that it's currently floating around the area that it was around its IPO. So I think that and it's bouncing off the 21 EMA. So I mean, there's a lot of factors at play right now that make me pretty bullish on Lee stock. I think it was up. You can't see it here. I think it was up a few percent after hours on Friday. So definitely keep an eye on Lee, you guys. And I think that is where we'll close the EV sector off. All right. So let's switch gears once again. Gold turns higher as the week for the week as investors parse Fed's historic policy shift. So again, you guys, I did cover this in more detail. Huge. Once again, you guys, you have to understand the macroeconomic environment if you want to excel within specific sectors. At least that's a big thing that I attribute to some of my success. You have to understand what's going on in the greater scheme of things. The entire markets, the economy, the financial markets, all are one big ecosystem, and they don't always directly impact each other, but there's definitely things you can take from the macroeconomic environment that will improve your performance within specific sectors. Okay, so sorry if that makes sense to you. Gold futures rose Friday, leaving prices higher to the end of the week after the Federal Reserve announced a policy shift Thursday that would allow employment and inflation to run hotter than in the past, implying that the central bank may keep benchmark interest rates lower for longer. Okay, so we'll go here and we'll take a look at gold, silver, and Bitcoin. Okay, so gold, silver, and Bitcoin, that's a big reason I love gold, silver, and Bitcoin. They're 24/7. They never sleep. Right there, money never sleeps. That's why I have it. I got this in because I've been a Bitcoin bull for so long. Bitcoin never sleeps. Money never sleeps either. That's the DXY. So the dollar is going down, and it keeps going down. So the dollar is tragic, you guys. I'll bring this up because you guys should see it. So the dollar, over the course of months now. Okay, so we go back. Ever since March, you can say, when we had the pandemic. You can see back in March, this is before everything tanked, the dollar was at 102. It's currently at 92. For the dollar, that's terrible. And we are still in a significant downtrend on the dollar. And remember, you guys, when the dollar goes down, equities, all assets aside from the dollar go up. Okay, that's why the market is high. This is the perfect example of inflation right in our faces. The markets are higher than ever in an economy that is objectively terrible. Okay. So keep that in mind. The dollar is it looks like it's just going to keep getting lower. I'm long the dollar. I'm long the US. I love this country. But just objectively, the dollar does not look good. That's why I love dollar inflation hedges like gold, like silver, like Bitcoin. And that's why they're also performing extremely well. If we look at gold, you can see gold is reaching all-time highs. And actually on the short-term time horizon, gold did just break this downtrend. So we saw a correction. That's healthy. Again, you guys, nothing goes straight up forever. We saw a healthy correction in gold. It did break this downtrend, and I think we're just going to continue a trend up. Silver, you can say the same thing. So gold is at all-time highs right now. So gold's previous highs around $2,000 was back in 2011. We're looking at silver right now. If we zoom back out, you know, let's go to 2011 again. So I'll show you guys what 2011 looked like. So silver is currently at $27. Silver back in 2011 was at almost $50. Okay, so silver. So again, gold is at new all-time highs right now. It's already a few percent above its previous highs that it set back in 2011. That's why I'm even more bullish personally on silver than gold. And then I'm even more bullish than that on gold and silver miners. Okay, and I am dropping a video tomorrow talking about my top 3 stocks for September. One's an EV. It's Workhorse. I'll just give you guys a hint there. But I'm breaking down an EV stock, a gold mining stock, and a Bitcoin mining stock, which we're going to look at after. Okay, so stay tuned for that. I have a nice write-up made for you guys. So I'm excited to cover that. But I'm extremely bullish on gold, silver. I mean, more specifically silver than gold, and then even more than that, gold miners and silver miners. Okay, so silver itself can 2x and still just be about at its previous all-time highs, which I think is easily plausible, especially with the macroeconomic backdrop. And then if you think I'm bullish on gold and silver miners, I'm even more bullish on Bitcoin. Okay, so Bitcoin, I mean, looking good right now. I am recording this as of Saturday. It's like evening, it's afternoon, evening-ish time, Hawaii time, of course. So whenever you guys were watching this, Bitcoin might be higher, might be lower. It's currently at 11.6K. Bitcoin, once again, you guys, on the once it broke this multi-year downtrend from its highs in 2017, that's when you see that move up. I think we're at the very beginning of a new bull market in Bitcoin. And I mean, as you guys know, I'll just say this right now. I do think that by the end of October, we're going to see at least a $15,000 plus Bitcoin. I think that's easily in the cards. And with that comes extreme gains in stocks like Riot and Mara. Again, you guys, I always say when I'm talking about these stocks, that I'm almost irresponsibly bullish on these, just because I think they have so much potential upside, especially right now. So right now, I mean, I've been adding to my bag significantly. So back in 2017, Riot hit a high of $46. All right, let's just go back right now. Mara hit a high in 2017 at $40. Mara is currently at $2.50. Riot is currently at $3.50. So these could, I mean, you're talking about 10, 20x's to reach previous highs. And I think that's easily possible, you guys, especially with the market cap in Mara at where's it at? Damn it. Why do I always have such a hard time finding this? Market cap of $82 million. That's minuscule. That's a drop in the bucket in terms of the equity markets. It takes very little capital inflow to boost this share price with a market cap so small. Same with Riot. I believe Riot's around like $130 million market cap. But I'm so bullish on Riot and Mara. You can see, we're not going to look close, you guys. I'll save that for next week. We'll do a stock talk next week on these two more specifically, because I do want to wrap this up, getting a little long here. But Riot closed the week up 10%. Mara closed the week. You know what? We'll take a quick look at Mara right now. Okay, so no, you know what? Let's go to 1 month. And then, okay, so you can see here, Mara specifically saw a huge pullback. And I always say this, you guys, volatility is not a bug, it's a feature. Volatility attracts investors, or volatility attracts attention. Attention attracts investors. Investors means price appreciation. And you can see here, Mara, we ran up significantly, and we've already pulled back significantly. We've already come to this area where we gapped up, which is super bullish to me on a short to medium term perspective, time horizon, I should say. It did successfully bounce off this line of support where it gapped up, or where it was before it gapped up on the 25th. It is now back in an uptrend. It's broken this downtrend. And I think, once again, Mara and Riot both will follow similar trends. The more Bitcoin goes up, because these are Bitcoin miners, I mean, if the price of Bitcoin goes up, these guys are paid in Bitcoin, and that means they're significantly more profitable. They both have been releasing extremely great news. I'll give you guys a hint right now. The stock I'm covering tomorrow is Mara, and I do break down a little more eloquently than I am right now, just because I'm kind of rambling. But once again, you guys, irresponsibly bullish on Riot and Mara right now. Super excited to see where these go in the future, along with Bitcoin, to fight the battle against inflation. And again, you guys, I'll keep you posted. And once again, you guys, please check this out. If you do want to know my specific call options, put options, positions in many of the stocks that we just talked about, check this out. Risk-free 7 days. Stick around if you like it. If not, no worries. Peace out. But yeah, first link in the description. As always, drop something down in the comments if you want to talk about literally anything at all. If there's anything you're excited about going into next week, if there's any stocks that I missed within the crypto sector, the EV sector, the gold silver sector that you're excited about personally, please let me know down below, or just, again, literally talk about anything. Always love learning from you guys. Always love talking shop with you guys. And until next time, always remember, take action, make waves. Peace.